Oil has just punched through $80 a barrel, and if you're watching markets this Wednesday morning, the 15th of July, 2026, that single move is sending ripples across every major index. Dow Jones futures are under pressure as energy costs climb, while Nasdaq futures are nudging higher, largely thanks to one name, Asml. The Dutch semiconductor equipment giant has just posted a second quarter earnings beat and raised its full-year forecast, giving tech investors a rare reason to smile. We have two powerful forces colliding in real time, rising energy costs pulling one way, strong tech earnings pulling the other. Let's break it all down. Crude oil crossing $80 a barrel is not a random event, it is directly tied to escalating news around Iran. Geopolitical risk premiums are being priced back into energy markets at speed, as traders assess the potential for supply disruption from one of the world's top oil-producing regions. We saw earlier in the year, back in March 2026, investors grappling with how to navigate markets during an Iran crisis, and those concerns have returned with fresh urgency today. For context, oil at $80 tightens margins for airlines, manufacturers, and logistics companies almost immediately. Petrol prices at the pump in the UK typically follow crude moves with a lag of roughly 2 to 4 weeks, so households may well feel this before the end of July. Asml, the company that makes the extreme ultraviolet lithography machines that every advanced chipmaker on Earth depends upon, has just delivered a second quarter earnings beat. Crucially, management also raised its forward guidance, which tells you demand for cutting-edge semiconductor production equipment remains exceptionally strong heading into the second half of 2026. Asml is effectively a gatekeeper for the entire global chip supply chain. No other company can manufacture the EUV machines it produces. When Asml raises its forecast, it signals that companies like TSMC, Samsung, and Intel are still committing to major capital expenditure on next-generation chip fabrication. That is a meaningful green light for the broader technology sector. Despite the lift from Asml's results, Nasdaq futures rising into a key technical level is the detail every trader needs to watch closely today. A key level is not just chart jargon, it represents a price zone where significant buy and sell orders historically cluster, and where the market tends to make decisive moves. Earlier this week, the S&P 500 and Nasdaq both slid as big tech came under pressure, so today's bounce is welcome but not yet confirmed as sustainable. The index must close convincingly above this level to signal that the recent pullback is over. Failing to do so could invite another leg lower, particularly if oil prices remain elevated and compress corporate profit margins. In the near term, the direction of oil is the swing factor. If Iran tensions ease, crude could retreat from $80, relieving pressure on Dow Jones Industrials and giving the Federal Reserve more comfort on inflation. If tensions escalate further, expect energy stocks to outperform while rate-sensitive growth stocks face headwinds. Asml's strong print suggests semiconductor demand is holding firm, which is positive for the technology sector regardless of the oil story. Watch for any additional Middle East headlines through the rest of this Wednesday session. They will drive intraday volatility more than any domestic data release. Here's what matters on the 15th of July, 2026. Oil above $80 on Iran news is the dominant macro risk today. Asml's raised guidance is the clearest positive signal out of the tech sector, and the Nasdaq must prove itself at this key level before bulls can claim the upper hand. These three stories are interconnected: energy costs, chip demand, and index positioning are all telling you something about where growth is heading. Stay informed, manage your risk, and we will see you in the next video.